Live from London, I'm Guy Johnson.
And in New York, I'm Vonnie Quinn. This is Bloomberg Markets. Time now for futures in focus. The dollar is taking a dip, even as the markets anticipate a Fed rate hike later today. Let's go to the CME, where Larry Shover of SFG Alternatives joins us. Larry, what is the dollar saying with the dollar index around 96.5 right now?
Yeah, backpedaling a bit, 5-day, 1-month basis. I think what it's saying is sentiment is looking more long-term right now, looking at balance of payment issues, fiscal issues, end of cycle issues, and so we're seeing a dollar drag. However, there's nothing else outside the dollar that's really that compelling at this point. I mean, the euro, it's hard to get excited about that. I would say the British pound looks cheap versus the euro. Beyond that, high-yielding currencies have done well. Australian dollar, New Zealand dollar. But for the U.S. dollar going forward, it's going to be tough because long-term issues are center stage.
What are people saying down there at the CME will happen if the Fed indeed goes ahead and increases rates and maybe shuffles the language a little bit in the statement such that it's considered more dovish?
Yeah, no, great. Well, I think people are saying or feeling that not all dovish hikes are the same, and that's what they're expecting. But when you consider the tightening of financial conditions, you can't argue against that. The brittleness of the global equity market, lowflation, et cetera. I think it's going to be, no matter what happens today, it's going to be really hard to get the 10-year yield above 3%. And that said, I think we're going to continue to see lower for longer.
Larry, what was the reaction to the inventories? We obviously saw, a drawdown, but not as big as anticipated. Crude is rallying, but that's only because it had this historic drop. What happens next?
Yeah, no, I think it's like a banana in a tailpipe. We're not going to fall for this one again. And I think the run-up to $76 in October, back down, there tons of money have been lost. Confidence has been lost. That in mind, I think traders, investors, et cetera, need continual visible evidence that inventories are dropping before they really get back into the bullish cycle again. Until further notice, it's going to stay in a very wide, volatile trading range.
All right, Larry, take some public transportation home today. Larry Shover of SFG Alternatives. Thank you.